Chip stocks rally, turning markets into a sea of green. Volkswagen's job cut sends shockwaves through Germany's workforce. And we look at gold prices amid regional tensions and financial uncertainties. Hello, I'm Taiba Aydin with the latest business and finance news here on TRT World. Asia-Pacific markets saw a strong rally on Thursday, largely driven by a surge in tech stocks across the region. Chip makers across Asia benefited from Nvidia's optimistic outlook on AI demand, giving a major boost to investor confidence. Tech stocks drove Asia-Pacific markets higher, with Taiwan's weighted index surging by 3%, with big tech names leading the charge. Taiwan Semiconductor Manufacturing Company climbed more than 5%, and Foxconn rose around 4%. Japan's Nikkei 225 jumped nearly 3%, driven by semiconductor-related stocks like Advantest, which gained over 7%. South Korea's Kospi climbed 1.4%, with SK Hynix soaring over 6%, as the AI chip market forecast by Nvidia boosted investor confidence. Other chip makers across Asia also rallied, with Tokyo Electron up 3.5% and Renesas Electrics gaining 2.2%. SoftBank also jumped 7.2% on its stake in AI chip designer Arm. Nvidia's CEO highlighted surging demand for AI chips, pushing AI semiconductor heavyweights to new heights. Meanwhile, global stock markets continue to rebound. Over on Wall Street, the S&P 500 advanced more than 1.7%, while the Nasdaq Composite rallied 2.1%, marking a significant bounce back from earlier lows. US Producer Price Index data is expected on Thursday, which could further influence Federal Reserve policy and market movements. Wall Street's positive momentum has driven optimism across global markets, with major indices posting gains. Let's get more on this now with Wael Makaram, financial market strategist lead at XNES. He joins us live from Dubai. Good to have you on the program, Wael. Now, what's fueled this tech rally, and how significant is Nvidia's influence on the recent surge in Asian semiconductor stocks?
Actually, yesterday was a very important day in the markets. We were seeing a complete drop following the US inflation data. However, the comments of the Nvidia CEO and the spark that he was able to create on the tech sector was very helpful for the markets. We started the session on a very down note, and then we ended the session up at the highs. And this momentum also moved into Asia, as you were speaking. So I believe this is not a short-lived momentum, especially that we've been lacking this for a while. Tech stocks were suffering since July, and we had a significant drop early in August. But now, after yesterday's rally, we're almost halfway through recovering all these losses. But this was a very good session yesterday, and we don't believe that this momentum is going to fade quickly.
Right, and you mentioned that this is a recovery. How long do you expect this to continue?
Actually, there are a lot of things to also watch out for, especially that we're waiting for the Federal Reserve meeting next week. And you mentioned the CPI today. I don't think the CPI is going to have much of an impact, especially that the CPI yesterday dropped to its lowest level since early February 2021. We definitely, the eyes are on the Fed. If the Fed's going to communicate a softer stance on monetary policy within the next few months, then this is going to be supportive for stocks, and we could be seeing this rally continuing higher. On the contrary, if we see the Fed reluctant to dropping interest rates as fast as the market is expecting, this could weigh on the current rally that we're seeing.
Right, and over in Japan, PPI came in lower than expected last month. How will this influence the Bank of Japan's monetary policy?
Actually, we've seen the PPI negative this first in a while, but this goes to several reasons. One, a drop in commodity prices, especially if we look at oil and the drop that happened during the past week. Also, the appreciating Japanese yen, which gained significantly during the past few weeks too. So this could just show us that we could be trending lower on PPI, and then this will also turn into CPI later on. When it comes to monetary policy, this could be a little bit of a bumpy road for the Bank of Japan to be confident on raising interest rates. We know how crucial it is for the bank to be not doing any significant surprises going on, because we've seen what happened early in August. So we don't think that the bank is in a hurry to raise interest rates. they will see more inflationary pressure before proceeding forward with raising interest rates towards 1% in the next coming meetings.
All right, Wael Makaram, financial market strategist lead at XNES. Thank you very much for your insight.
Thank you for having me.
Now a quick look at some of the other top business stories from around the world. Russia's inflation rate remained high at 9.1% in August, unchanged from the previous month, but exceeding the 9% forecast. This marks the steepest rise since February 2023. The surge follows a dramatic 11% jump in domestic gas prices at the start of July, fueling ongoing economic strain for Russians. Boeing workers are set to vote on whether to strike or accept a new contract offer. If the contract is rejected, a work stoppage could begin on Friday. The potential strike would further damage Boeing's reputation and finances, already struggling with issues in its aircraft this year. However, a walkout is not expected to cause flight cancellations or directly impact airline passengers. US holiday sales in the US are expected to grow at their slowest pace in 6 years. That's due to persistent inflation running people's savings dry. Holiday retail sales are forecast to rise to between 2.3 and 3.3% in the November to January period, lower than the 4.3% growth last year. And market research firm Motion says global sales of EV cars rose by 20% year-on-year in August. It was driven by record high sales in China and despite a 33% sales drop in Europe. Motion also expects sales of Chinese EVs to rise by 1/3 from last year to 10.5 million vehicles. Still to come, gold shines again as the US dollar stumbles while investors hold their breath for the Fed's next play in the inflation game. That and more after this short break.
We all want to understand our world. The news is important, but to really get it, you've got to get personal. Here on The Nexus, we look behind the big events, the big headlines, with the people who are in the story. What drives them? What makes them tick? Sometimes serious, sometimes fun. Always human and never compromising on the facts. Analysis that will get you thinking. Nexus on TRT World.
Volkswagen's decades-old promises to its workers are beginning to fade. The car giant is struggling to stay afloat in a rapidly changing market. Now the threat of job cuts looms over its plants in Germany, sending shockwaves through the country's workforce. Robin Adams reports.
For years, Volkswagen guaranteed job security for its workers. But that promise is fading. The company is facing tough competition from cheaper Asian automakers and must cut costs to survive. Workers are nervous and layoffs seem almost certain.
From what I've heard, 30% of employees will be fired in the near future. I hope that's not the case. You would not wish that on anyone to be fired, but if it helps VW so that the company does not completely go down the drain, sacrifices are necessary. But before anyone is out of a job, something must happen.
Volkswagen has cancelled its guarantees at 6 German plants, which protected jobs until 2029. It's part of a plan to cut more than $11 billion in costs and turn the company around. The company is aiming for a 6.5% profit margin by 2026, but right now it's at just 2.3%. Workers are worried and the uncertainty is affecting everyone.
People are scared of losing their houses, that they will be fired. I have been working at the plant for 38 years.
Tension also has risen between management and workers. The company is considering closing factories for the first time in its 87-year history. But Volkswagen is a major player in the country's economy, and any large-scale layoffs would have a serious impact. The company's officials report that if it doesn't cut costs now, it might not survive.
Everyone is worried about his job, but I can't say anything more about it right now because nothing is official, but everyone is worried. It would be unusual if not.
Meanwhile, the unions are preparing for a strike. They are pushing for wage negotiations to start earlier than planned. But even with these efforts, nothing is guaranteed. Authorities say Volkswagen needs to make quick decisions to survive in a changing market. The company's legacy is on the line, and so are thousands of jobs. And the pressure is on to adapt or face the consequences. Robert Adams, TRT World.
Let's cross now to London and speak with Steve Fowler. He's an automotive editor and consultant. Hi there, Steve. Now, how significant is this move for Volkswagen? How big of a cut are we talking here?
Well, this is hugely significant because the role that the unions have always played within the Volkswagen Group is huge. You know, even board members have to be interviewed by union members before they're allowed to sit on the board of the company. So this is hugely significant. Factory closures just don't happen in Germany, and it's certainly for Volkswagen. We already know that Audi is looking at closing plants elsewhere in the world. And it's something that has happened elsewhere across Europe. You know, if you look at the huge cuts that Stellantis has had to make itself profitable, the car business is going through a huge period of turmoil and change. And Volkswagen, just bluntly, to survive, as was said in your excellent report there, to survive, Volkswagen needs to make significant savings. And they've got too many plants building too many cars. They need to reduce that. Build fewer cars and the cars that people actually want to buy.
Now, what kind of an impact could this have on the German economy? We know manufacturing is one of its leading industries.
Yeah, I think this will be significant. Where the likes of Volkswagen lead, others will follow. And Germany is a very big manufacturing company. So I think this is going to set a precedent for elsewhere. You know, if Volkswagen is able to cut jobs, to close factories, it may be something that other companies throughout the country in Germany may have been wanting to do but frightened to do because of the power of the unions. So it could be a precedent that sees other industrial companies and manufacturers in Germany following suit.
Right, and what kind of challenges is it currently facing in the market, particularly with Chinese competition?
As I said, the car industry is going through a huge period of turmoil and change, particularly with the cars coming across from China. The plain fact of the matter is Volkswagen isn't making enough money. You know, its a range of electric cars just isn't good enough. It hasn't taken the market by storm in the same way that a new Volkswagen Golf might do, for example. So they need to make better cars. The company is being well led, I believe, with a degree of transparency and honesty that I haven't seen from Volkswagen. They know what the problems are. They know what needs to be done to fix it. They need to make better electric cars. They need to find a way of making those margins higher on electric cars. That means making cuts elsewhere in the business. And they need to compete with these cars that are coming from the Far East, particularly China, which are hugely competitive. And it comes down to the cars that people want to buy. And not enough people want to buy electric Volkswagens. They're looking elsewhere at other brands these days.
All right, Steve Fowler, we'll have to leave it there. Thank you very much for your analysis.
Thank you.
Gold prices are climbing back on Thursday as the US dollar and Treasury yields come under pressure following new inflation data. A short time ago at 7 GMT, they were up 0.2% at $2,515 per ounce. US gold futures were steady at $2,543.40. Gold took a hit on Wednesday after inflation came in higher than expected. Hopes for a large rate cut from the Federal Reserve next week have faded, and markets are now expecting a modest 25 basis point cut, with inflation proving harder to tackle. For gold, as rates go down, its price is expected to go up. And this is all good news for other metals too. Platinum, silver and palladium all saw gains despite inflation worries and geopolitical concerns. Spot silver is trading at $28.68 per ounce, and platinum gained 0.9% to trade at $959.95. Palladium climbed 1.3% to $1,021.84, its highest since July 8th. This came after remarks from Russia's President Vladimir Putin, who hinted at restricting exports of metals like uranium and nickel. Analysts say this potential move could shake up global markets and push palladium prices even higher. Joining us now from Dubai is Bas Koojman, CEO and asset manager at DHF Capital. Good to have you back on the program, Bas. Now, with gold prices bouncing back and inflation still a concern, what are the key factors driving this recovery?
Yeah, thank you so much for having me again. It's very interesting. The volatility in gold keeps just continuing. We had some hard times reaching that $2,500 an ounce mark, passing through a couple of 2-3 weeks ago. Highest levels recorded on 20 August and multiple times around this 25-40 level. I think it's mostly due to the geopolitical tensions the last couple of months that we have seen this strength in rising the gold price. And we will need to see what the rate cuts are going to do, even though less than expected.
Right, and on that note, how do you see the Federal Reserve's smaller than expected rate cut impacting gold and other precious metals in the coming weeks?
It would be impacting gold technically less than larger rate cuts. On the other side, the rate cuts from like 6 at the beginning of this year, at this moment, only 85% chance of half the rate cut that we expected 2 weeks ago. It's still a very unclear market what the final decision will be. And it will maybe affect the gold price a little bit less than expected if the rate cut would be bigger. We currently see already 21% increase on gold this year. And we kind of thought that it would halt a bit around this 2,500 level, which it does. And we will need to see it stabilize around this level probably for the rest of the month.
And beyond gold, silver, platinum and palladium have all seen gains. What does this broader metal rally tell us about investor sentiment in today's market?
I think in general, investor sentiment is strong on metals, as it is the safe haven for a lot of investors, also hedge fund managers and other money managers. Central banks have been purchasing a lot of metals. So we've seen a lot of retail trading in the gold market and silver market as well in April this year, just pushing prices up, basically a high demand for this safe haven asset. Mainly also driven by the geopolitical tensions that we've seen this year and lately, most of it in the Middle East area.
All right, Bas Koojman, we'll have to leave it there. Thank you very much for your analysis.
Thank you so much.
The UK economy flatlined in July, indicating no growth within the month. One of the three main sectors, only one, which is services, recorded any expansion. This comes as a blow to the newly elected Labour government, which is promising to boost the country's performance. Emre Boz has the story.
These dark clouds gathering over London's Tower Bridge may be a bad omen. New data reveals the UK economy had no growth in July for the second consecutive month. The main culprits, the declining manufacturing and construction sectors. The only sector that saw an increase was the services industry, growing by a meagre 0.1%. In fact, the UK's economic growth has been consistently low, staying under 1% since the beginning of 2023. And within that period, it even hit a technical recession, or two back-to-back periods of negative growth. So why is this happening? Analysts say one reason is due to falling state and business investment. The Institute for Public Policy Research found that the UK had the lowest level of investment in the G7 for 24 of the past 30 years. Another reason for the slow growth is the higher cost of borrowing, triggered by the Bank of England's raising of interest rates since December 2021. They have climbed to 5.25%, the highest since 2008. This has reduced domestic demand in the country, but while it's bad for the economy, it's been good for demand-driven inflation. The rate of price rises in the UK has been on a downward trend since the beginning of the year, reaching the Bank of England's target of 2%, indicating that the hawkish policy is working. The Bank of England began cutting rates by a quarter point from a 16-year high in August. They're now at 5%, but with economic growth remaining flat, the bank may be pressured to continue this trend even further. Emre Boz, TRT World.
Chinese smartphone maker Huawei unveiled its latest model, the Mate XT, on Tuesday, just hours after Apple unveiled its latest iPhone. Huawei is seeking a return to the smartphone market following years of US sanctions. Malik Fuda has more.
It's David versus Goliath. Beijing is taking on Washington in what appears to be a quickly heating up tech rivalry. Huawei has revealed its new product, the world's first trifold smartphone. The Chinese electronic giant's announcement was carefully timed, coming just hours after rivals Apple unveiled their latest iPhones. But surprisingly, what generated the most buzz wasn't the device's features or how it compares to Apple, but its price tag. The Huawei Mate XT starts at a whopping $2,800 in comparison to the iPhone 16 Pro's $1,000 starting price, and reaction from the company's domestic market has been mixed.
On the price point, I feel like it's just a little bit high for us working class people. I feel like if the mid-price model was priced at entry level, we could consider, but not as it is.
It's the world's first trifold phone, and I feel like it's actually worth the price. I have been a Huawei customer for a long time. Their products are good quality, reliable and smooth. That's worth it to me.
Instead of releasing a brand new frame, Apple has opted to beef up this year's lineup with new tech. The main difference being the introduction of generative AI.
Apple seems to have grown tired of bringing out innovation with every product announcement, and this has led to increasing competition in the global computer and smartphone market. And one of these companies is definitely Huawei, which has invested a lot of money in development capacities in recent years.
And it looks like Huawei's investment is paying off. The company has received 4 million pre-orders for its high-priced phone, which on its own is at least $11.2 billion in pre-sales revenue.
It is not so much the price alone that is important for the success of a product, but the user experience. So people are quite prepared to invest over $1,000 up to $2,000 for a new smartphone, but they want to see visible innovation in return, and Huawei has delivered this.
Huawei has been making a comeback with its new releases, resulting in a double-digit increase in both its revenues and profits, despite US sanctions. And if its latest offering outperforms its US rival, the future for Huawei could be even brighter. Malik Fuda, TRT World.
Amid international isolation, Russia is still able to attract foreign tourists, and that number is constantly growing. The capital, Moscow, plays an important role in attracting tourists from overseas and becoming the gateway to trips deeper inside Russia. And as traveling abroad has become more complicated and expensive for Russians, domestic tourism is breaking records as well, with 78 million trips made inside Russia last year. Dasha Chernyshova has the story.
Russian capital's popularity is growing among international tourists, despite Western pressure. 500,000 foreign guests visited Moscow in the first 3 months of 2024, an almost 40% increase from a year earlier. Most come from China, Turkey, India and Iran. Mati is a tour guide from Iran, taking groups to Moscow, St. Petersburg and this autumn to Murmansk to see the Northern Lights.
Two big groups, 30% for the first group, after that the second group, 30% again. Most of them, some of my people, now I came to Russia and they like to come to Russia again, because here is really beautiful.
Moscow mayor said international tourism is rapidly developing and the number of tourists coming from countries like the UAE or Qatar now even exceeds pre-pandemic levels.
My friends, they advised me to come to Russia. They said Moscow is a beautiful city with the people. They are so, so friendly. So that's why I came here.
I like all the people. The places is very nice for walking.
By 2030, Moscow hopes to welcome 6 million foreign tourists annually. Yet the key driver of growth is in domestic tourism. In 2023, 22.5 million internal tourists visited Moscow, with the tourist flow coming close to the record year of 2019.
Internal tourism has grown a lot. Judging by my region, people come a lot and we travel a lot as well. It is difficult to buy plane tickets, they are fully booked. There are many places to visit in Russia.
The tourism industry is growing. Last year it gained 178 billion rubles, roughly $1.9 billion for the capital's budget, which is almost 50% more than a year earlier. These funds are sufficient for the construction of 70 new schools. The authorities also inject a lot of funding into the industry as part of the national project Tourism and Hospitality Industry, which seeks to make travels around Russia more convenient and attractive.
Growth in tourism from both domestic and foreign visitors has been identified as one of the key strategies in the development of modern Moscow. It is a matter of future-proofing the economy of the capital. And at a time when every ruble counts, tourists are a very welcome source of income for all. Dasha Chernysova, TRT World, Moscow.
Well, that's all your business news for now. Thanks for watching.